What up, Devil? Sensei Tutum here with another Thursday trading topic video for you, where we look at all things trading, whether it be a post-mortem, a setup, or a trading play. This week I've got a post-mortem for you, and I don't want to focus too much on it's a smaller trade in here, but I don't want to focus too much on the larger degree, because as I like to always say, the only degree that really matters when you're trading is your trading degree. Of course, you do want to have, in my opinion, an idea a degree or two above yours, which way the market's moving, so that you can, know if you're swimming with the current or against it. Personally, I like to swim with the current, and in this currently, I am of the bearish bias because of this 5 swing move you see that I have highlighted. And what is one of the most basic things we all know about Elliott is that a correction cannot be 5 waves. So, and of course, without zooming out, we know that we have a long-term uptrend to this point. We may be correcting some or all of that big uptrend, especially with this big 5-wave move we did here. So the bias then becomes that we should see a similar, at least similar move to this after a corrective, because a zigzag, for instance, which is the most common corrective you might see, is a 5, 3, 5. So all of this in here is, in my opinion, part of a 3 of some sort. So with that bearish bias in mind, again, remember, the only degree that matters on a trade is a trading degree. But you're more careful with a bullish trade. You certainly don't want to do it at this degree, right? You want to be well under this degree if you're going to take a bullish trade. So again, it's nice to have context, but the only degree that matters is your bullish. Your trading degree. So zooming in here, what we had was off of what looked to be like the start of the next leg of this here with what appears to be a nice 5-wave move down. However, it truncates, which is very uncommon in a zigzag, right? So normally you see something like this, you would be expecting a 2 to be put in. But we had a move here that's, objectively, you can't really tell super clearly, is this a motive or is this a corrective? You certainly don't feel great about it as a corrective to buy, because it's, quite steep and bullish looking, especially at the beginning, which most correctives are at the beginning, the strongest, but neither here nor there. You're then at this point, you're going to be very interested to see what the price action is out of it, and you get what appears to be actually a very clean 3-wave move that you could have been a buyer of, but it was pretty atypical in that you barely advanced this leg to this leg, and you didn't get any high probability relationships there. However, and this is where your bias comes into play, and I told you mine was bear, but if you were bull, you would see that the algo goes right to the golden corner pocket perfectly, right? So Sam actually showed this in the Discord. So at this point, let's just say you weren't in it, I wasn't, because of the bias. However, you get the strong reaction, right? So as soon as you get this reaction, then you start to assume, okay, then what I have here, no matter what my overall bias is, then this is most likely a motive, and I should match it. Just like I'm expecting to match this on a lower degree, a corrective within a corrective, I'm expecting to match this. So that would be, if this is going to be a zigzag, say this is a motive, I'm looking for a 1-to-1 relationship out of it. Or an algorithm, if you're looking for algo plays, you look for your algo targets. There's target 1. Target 2 and target 3 are actually on there. Oh, here they are, way up here, but not relevant to this. But say you weren't a buyer here, okay, how do I get in? I see it going off, and of course we'll draw the obligatory pitchfork, because especially when you saw that the trigger line rejected the price there and then it bounced hard off of it, that's usually a good sign that it's on its way. And again, I always tell you guys, I've said it multiple times in this since I've started focusing on these trading videos, that I love a pitchfork that that has relevance to the median before you've ever even drawn it. That you would not have known that this was a relevant median here until this swing was put in and you draw it. So you have multiple connections with this median before you even finish drawing it, the pitchfork. So those are always, to me, the most powerful. So then you know that if this pivot holds, you have an 80% chance to reach this median line. So that's a hell of hell of an odds in trading. Of course, this pivot has to hold, and then you got the rejection off this trigger and a strong move out of it. So then you really start to feel good. Okay, this median's in play. I have this algo in play. Where do I get in? Well, you got your first retracement here, and it didn't offer anything deep, right? So you may have missed it off of at the time. However, once it then, that's the thing, is it's hard if you're not in when a bull move starts, especially in crypto. It's hard to get in, but sometimes you need to just find the pools that the algos are on, and a lot of times you'll see that they're on previous swing highs. Look at this, right to the 618, and then you get. Let's go down to the 15-minute here, because it's more of a 15-minute trade. You don't have. Let's see, swing high. Get it right on the ticks here. You actually have a reaction at every single algo. Not much there, but every single algo profit take. So you know that you at least have some money in the market on those swings. Well, then you run through target 3. What do? Pull from swing high and just try to follow the series, right? Swing high, 50% entry. So then you know, as an algo trader, whether or not you think that this is a 1, 2, 3, 4, whatever, this is, which is, of course, you can do because you're expecting a motive from here, What's the most probable relationship out of for a zigzag? It's a 1-to-1, A to C, right? A to C. And then you expect to also meet the base trend channel. And this is how you build confluence on targets. So you have all these overhead targets that you haven't reached. You haven't met the median line, of course, but you haven't met this algo. You haven't met the top of the base trend channel. You haven't met the 1-to-1 of this move. So, and there's nothing in Allen's pitchfork method that says that once you hit a pitchfork, the move is over. In fact, it's very different than that. A lot of people seem to think that that's the case. But I won't get into that. So it just, in this instance, offered you the entry you needed. It gave us, it rejected us down to the 50% pullback off this swing high following a series. So then you know that you can take a trade here. Now, people might say, well, you say you want to focus on 1-hour trades. And yeah, I mean, it's a 15-minute chart, but really this was an overnight trade. I held this overnight, or at least had entries set up for overnight. I guess it played out really quick, but the entries waiting for entry were there for quite some time. So in my eyes, more intraday, honestly. But it offers just as good of a risk reward as a big move like this. I don't know if most people that watch are swing traders or scalpers. I'm personally a swing trader, but you would like to get this move, right? However, if you're just trading measured moves here, it offers a 4.5-to-1 ratio risk reward. Great risk reward, but you missed it if you had a bearish bias. I just walked you through the contextual reasoning of why I personally missed it. However, once you have this offered, yeah, it's a smaller move, but it's all about the risk to reward. When you're trading, you just scale the position to your technical analysis to get your desired risk, right? So if we go to target 1 here, just below the 65. This is actually, I don't have this right. It's actually a 5. This is actually a better risk to reward. It's a 5. It's just under a 5. Whatever. 4.8 to 1. It's slightly better risk to reward on this trade going for algo target 1 than it was for this trade. So this, and of course, now we're then using our contextual bias. We sell this at this algo target, right? Because then, of course, we're getting up to the area of the 1-to-1. Of course, you could get greedy and hold it and get all the way. The algo actually. All right, let me get rid of this thing. It's annoying. The algo actually meets at the top of the channel. So, to me, that's enough confluence to get the hell out. I was out there, but the 1-to-1's here if you want to get more greedy. And of course, you have multiple algo targets above. But with my contextual bias, this should be a similar move to this. This is, to me, possibly a completed zigzag. Could be wrong, doesn't matter. And I'm not shorting because that's it's not what I would do here. But I'm certainly then not taking the next algo. I'm in wait and see mode, right? And this actually looks corrective. So we may go up and go deeper. But I still, no matter what, with this move here, even if we go up, because we have been quite shallow thus far, like I would like to actually see this get deeper. We haven't even hit the 50, and let me tell you, there will be sellers at this 50 for sure, and this golden corner pocket, just like this one. But you know, if you really wanted to, if you had a bullish bias and you're trying to ride this out, then what I would do here, if you were to, obviously you can't pull from the inch. This next series broke, right? So you can still pull from the previous entry. And possibly look for, and you're actually already gotten double reactions at that 50. So it appears there is probably money on this. And you know, this could be a trade and play. For me, again, I'm sort of expecting zigzag here. I don't like this one nearly as much as I like this one, where I had all these larger contextual confluence targets above to go against the current sort of. This is a, you know, I'm trading with a bearish bias with a bullish trade, right? And if you have a bullish bias, I certainly don't hate you to be a buyer here. I mean, plenty of, let's see, lower low, higher low. You got a bullish divergence on this degree. Yeah, I mean, I don't hate you if you take this trade, but I'm a conservative style personally. I like to win a lot more than I lose, so I don't necessarily need to take a bunch of trades. I'd like to have a good win-loss record. Put it that way. Anyway, I would not hate you at all if you took this, especially if your main thing is measure move trader, then you kind of got to. But that's not what I do. I just use it as a one of my pillars of my analysis techniques, and that's what we teach here at Trade Devils: measured moves, market geometry, and Elliott Wave. This one was all three combined using confluence, and of course, you could take this next trade here, but again, it's not nearly, let's see. Yeah, that's going to this. So not nearly as high of a quality as this one, which I did show to the members to take. Let me pull that up for you guys. I guess I'm supposed to show that, right? Here it was. So had it for the members. It was all right there on the chart. Everything I just told you. Oh, I'm on a different chart. There was also a horizontal resistance level here that it actually rejected at exactly. These things are so money. I don't have it on this chart, so I'm on a different chart now because I cleared it so I could show you guys. Anyway, that's enough for this one. If you like it, let me know, and we can do more about it. So could be another bullish trade, but I'd be careful because this is staring us in the face. This is staring us in the face. So to me, the current is pushing down. Of course, if we break through here, then I'd flip. But I know there's going to be sellers at this level, which is before this next algo. If you're taking that trade, there'll definitely be sellers here, which is at algo 2 for that next trade. So yeah. All right, boys. Toot out.